Yeah, the Italy turn here, Neal, over the weekend seemed to be the one that really pushed this over the edge. And I don't know if it's just because we're worried about not getting enough pasta here in America, but the reality is this. It's definitely spreading, and some of the numbers you mentioned, even with South Korea, are very damning. Now, as an investor, though, and we've talked about this before on the shows, Jonathan has talked about it as well, is this is a time when, as an investor, and you're obviously somewhat, I think, long-term in nature here, but you have other things in your portfolios besides stocks that are tied to China. That includes stuff like gold. It includes things like bonds. And it includes things like cash for rainy days like this, because I do believe Jonathan's right. Things are probably going to get worse, Neal, before they get better. But don't forget, similar to 2008 and early 2009, there were some amazing buying opportunities that came as a result of these panic and fear moves. And I don't think this time is going to be any different.
You know, gold is obviously jumping today. No surprise, Jonathan Honing. But I mentioned gold a lot in this show. A lot of people think, oh, you're talking about gold too much. But what's been remarkable about gold is that it has been climbing through crises and no crises. And I'm wondering what that's about. Obviously getting a big push on a day like this. But what do you make of that?
I mean, no, this is a longer-term trend. You know, that's the way that markets actually tend to work. Not these massive one-day moves, but a longer-term trend. And, you know, gold, as you point out, has been going up basically since the middle part of last year. It's at a 7+ year high today. And, Neal, what's bullish, especially for gold, is when I look at the stock market, almost all of the stocks at 52-week highs are gold stocks. So, again, I think back to the early 2000s, gold went up for a decade from 2001 to 2012, in effect. I think we're going to see the same type of a long-term move here. And $1,600 an ounce seems expensive now, Neal, but a lot of the precious metals are at all-time highs. Gold could follow suit.
All right, we'll watch it very closely. Gentlemen, thank you very, very much. To show you how widespread this impact is, as both of them are pointing out, I'll take a look at what's happening at the big toy fair right now. This is when the industry sort of struts its holiday stuff, if you will, what looks promising down the horizon, especially for the Christmas season, which to these guys is like something you planned for yesterday. And this whole coronavirus thing is disrupting that. Lauren Simonetti is at the Javits Center with more. Lauren.
That's right, Neal. Hundreds of millions of dollars in orders are placed at the New York Toy Fair. But the issue this year is, okay, you might get those orders, but where's the product coming from? Over 80% of toys are made in China, and there are supply issues in China. I was talking to the CEO of MGA Entertainment, which makes the most popular toy brand in the world, which is LOL Surprise, those popular dolls. And he said, look, you know, the factories are back open, but they're idle, and they're idle because the raw materials aren't coming in, so they can't make the toys. They were supposed to start their Christmas production February 1st, but the Chinese New Year and the coronavirus fears putting that completely halted. He's worried, and so are many other people here today. I have Marissa DiBartolo, editor-in-chief at the Toy Insider, joining us now to kind of just explain how big of a problem is supply coming out of China right now for the entire industry.
Yeah, so it is becoming a little bit of an issue for some companies. Right now we're looking at potentially about a 4 to 6 week delay on some of those spring and summer items. But so far we should be able to get through the Easter season. And the good news is a lot of companies have some extra product that held them over from last holiday.
And they have the extra product from last holiday and also probably front-loading those tariffs.
Yeah, exactly. So everyone was a little bit concerned about the tariffs coming out of China. So a lot of companies ordered a lot of extra product. So it also gives retailers a chance to get rid of some of that overstock too, which is good.
Okay. And another thing, Neal, as I send this back to you, you know, the president is in India today and tomorrow. There's a real possibility that India might be a new source for some of these toys. Is that correct?
Yeah, so some companies are already manufacturing in India, and it's definitely a channel that a lot of companies are looking into.
All right. Neal, back to you.
That's very, very interesting. And another reason why the Indian market, say today, down about 2% is weather these body blows. Thank you very, very much, guys. In the meantime, a lot of companies are saying that they might have a coronavirus cure, but that's sometimes easier to detect than not, depending on the company. Charlie Gasparino has been looking into all of this.
Yeah, two big, I would say, business stories coming out of this, aside from the obvious market reaction, is I've been talking to a lot of hedge fund traders. They really believe this is overblown. And, you know, it's interesting how rational Wall Street looks at stuff. I mean, overly rational. Right. They're basically calculating the death toll of the coronavirus. Okay, what they're saying is, don't equate this to the bubonic plague where everybody dies. That's how they're looking at it, because that's the market. The initial market sell-off is catastrophic. We're down 1,900 points right now. That this thing is not is bad in terms of a death toll. Then
But not scared than the fact that it's much more widespread than earlier thought. The Italy thing, the 28, 30 countries now.
Yeah, those are bad headlines, no doubt. But just remember, this is not something that everybody automatically dies, and people are just touching something and they're dying. And the market is somewhat reacting to that. I think the other thing that scared them, quite frankly, was China. Just their reaction to it, the lack of real information. It was a very bad way that China handled this out of the gate. And the markets are skittish on that. But I'm just telling you, traders are factoring in. We're at Dow almost 30,000. We have low interest rates. Why would you not use this as an opportunity to take some profits?
And you and I can look at this. We remember the 87 crash. I repeat this, Dick Grass and a host of others. 3 to 3%. It's not a number to slough off. But when you think 1,000 points, I mean, that's double what we had on October 19th. And that, at the time, represented a quarter of the Dow's value.
Absolutely. And think about it this way. There is no reason. I mean, the market is overvalued, but we have massively low interest rates. So where are you going to put your money? So
do they say that overvalued and the fact the fall now and the low interest, maybe the market multiples are changing as we speak?
Maybe, but it's a reason to take money off the table, something like this that hasn't really impacted U.S. businesses. We should point out, as Lauren just pointed out, supply chains can change very fast. Market adapts to that. Now, here's the other sort of business story. From what I understand, because I know a few people that are kind of in this business, there is a flood of products being thrown at the FDA right now to try to cure or develop a vaccine for coronavirus. And we're going to be seeing a lot more stories about this. Now, here's the conundrum that that I guess the FDA has, the government. On one hand, a lot of these things are scams. On the other hand, people would like to try this stuff fast. The FDA process is notoriously slow. So those are the two things. And I think you'll probably see the Trump administration at some point address this, because the products are now being flooded to government to go through the various FDA phases. I mean, I think there's 3 phases to it. It could take a while. It'll be interesting to see if the Trump administration fast tracks any of these. Some of these look more promising than others. Some of them look promising because they don't necessarily have a side effect immediately that, people aren't going to die from taking the product themselves. So the FDA does have to wade through this stuff. But that's the other business story here. The fact of the matter is these big pharma companies are flooding the government, and they have to wade through these various things. And we'll see how fast it goes. I will just say this, though. If you're a small investor out there, there's a logical reason that the market is down 1,000 points today. And it's not because people think the coronavirus is going to stop the economy in its tracks. It's because it's a bad headline. There's no other reason to take money off the table when you have interest rates at such low levels. And
that might provide a floor to this. That's the hope, at least, right? For those along the market and all that, this provides a floor.
Just remember, that's why. I'm not saying, listen, now's not a bad time. If you've been in the market since Dow 20,000, why not take some money off the table?
And maybe that's what people
and put it in a muni bond.
That's what, in a muni bond.
I like muni bonds. I don't know.
Well, that's good
triple tax free if you're in New York.
Patriotic of you.
Yeah, remember Jim Leventhal, the great muni bond salesman?
Absolutely.
He was. I miss him.
All right, thank you, my friend. He is right. Well, for now, I mean, they are selling and maybe addressing some of these other concerns later. The Dow off about 982 points. Only issue that is up, and I stress nominally up among the Dow 30 is Verizon. I have no idea why. We'll have more to this.
I believe ETFs are a great way to invest in the market. I just don't believe in market cap-weighted ETFs. My research shows how fundamentals can lead to performance, and that's exactly how WisdomTree builds their ETFs. To me, it's a better way to invest. Legacy ETFs that track the market? That's yesterday. Modern alpha ETFs built for performance? That's WisdomTree.
Carefully consider the fund's objectives, risks, charges, and expenses before investing. Obtain a prospectus at wisdomtree.com. Read it carefully.
Imagine traveling hassle-free with your golf clubs. Now you can with ShipSticks.com. No more lugging your clubs through the airport or risk having your clubs lost or damaged by the airlines. Sending your own clubs ahead with Shipsticks.com makes it fast and easy to get to your golf destination. With just a few clicks or a phone call, we'll pick up and deliver your clubs on time, guaranteed, for as low as $39.99. Shipsticks.com saves you time and money. Make it simple. Make it Shipsticks.
Let's face it, most people think getting a mortgage to refinance or buy a home isn't easy. I'm Buddy from Embrace Home Loans, and our mission is to make it easy. With technology, we've cut the paperwork, offer 24/7 updates, and give you a dedicated loan specialist. We have mortgages for nearly every situation, and we'll beat any competitive offer or pay you $250. Get your mortgage the easy way. Call Embrace at 888-459-1999 today.
What is luxury? A state of mind, free time, a villa, a vista, that place you love. It's more than you expect. It's perfection, it's opulence, it's service. All included, all the time. Fulfill your desires. No limits, all lavish. Chic days, posh nights, live your dreams. Elegant, royal, fulfilled. 2 hearts, 5 stars, 1 name. Sandals. Call 1-800-SANDALS.
Our retirement plan? Well, our advisor chooses mutual funds he likes and invests in them. Simple as that.
Yeah, he knows about this stuff.
Yeah.
That's nonsense. A bunch of mutual funds is not a retirement plan. Mutual funds often have layered fees, cost more in taxes, can leave you over or under diversified, and aren't tailored to your specific goals. You may retire, but you can do better. Do you know the downsides of mutual funds or what other options are available? Call Fisher Investments for your free copy of 6 Pitfalls of Funds. We'll also send you a bonus, the definitive guide to retirement income. Call 1-800-737-0077. You're unique. Why have cookie-cutter investments? If your portfolio is $500,000 or more, call us at Fisher Investments. It's your retirement. You can't afford to listen to nonsense. Call 1-800-737-0077.
All right, it is not just us. The Dow Jones Industrials in and around 1,000-point free fall here. So we're revisiting lows we had right from the get-go this morning and topping them. But we're keeping an eye on that with 29 of the 30 Dow components down. Verizon, the save green issue, but it's in Europe and Asia and Africa and much of the world where we're seeing anywhere from 2 to 5% declines. The big catalyst for this was the idea that Italy all of a sudden is locking down cities, 10 of them in quarantine now, affecting upwards of 50,000 people. Ashley Webster on what's happening abroad that we're missing now. Ashley.
Yes, it was that news out of Italy, Neal, that really, I think, put another chill through the markets today. We've been so focused on China and those countries nearby, but now all of a sudden Italy crops up. We have the media in Italy saying there are now 7 deaths, even though the government only confirms 5. As for the number of cases in Italy, 230 confirmed. That number is expected to go up. And the problem here is that the Italian health authorities say they cannot track down who they believe is patient 0. And they also believe that this individual could be showing little or no symptoms, so they have no idea, and they're continuing to move around freely, and that's why we're seeing this outbreak continue to go, to carry on. As you said, 50,000 people, mainly in Lombardy, 2 regions of northern Italy. We're talking about Lombardy, which includes Milan, the financial center, and Veneto, which includes Venice. By the way, the Venice Carnival, which is a big deal this time of year, has closed down early by a couple of days. But those people in lockdown, not allowed to go out, not allowed to do anything without permission. And you're looking at video here, Neal. 40 people at a time are allowed to go together to the supermarket to replenish their goods because they are basically confined to home. The Italian index today, as you can see, down basically 5.5%, one of the biggest losers of the day in Europe. But the big question is, We know Europe has open borders as part of the Schengen agreement, which means you don't have to go through any border controls. Well, now that's starting to raise questions. We had a train overnight going from Venice to Munich that was indeed stopped at the Austrian border because there was concern that a couple of passengers on that train were exhibiting signs of coronavirus. Now, all those rail lines were shut down for a couple of hours. They are reopened, but Austria has now got a task force to decide what to do next. And as you can see, the European stocks here, the car stocks, Ferrari down. Then you look at the airlines getting absolutely pummeled. Ryanair down 12, Air France down 8%. So having a big impact. How this plays out in Italy and whether we see the virus continue to spread north into the heart of Europe, that too could be a major concern. The other thing I just wanted to mention very quickly, Neil, the World Health Organization says it's not reached the level of pandemic, but a lot of people in Europe are now looking at Iran, saying they're very concerned because there's a lot of questions about whether Iran is able to handle the outbreak of coronavirus. Some reports say there's at least 50 cases, others say more, but there is concern that once this thing gets loose, especially in countries that may not be very well equipped to handle it, then we are looking at even more problems.
No, very good point. Ashley, thank you very much. And he was talking about the World Health Organization that has also said, despite reluctance to declare this a pandemic, that it does see a turning point in Wuhan, of course, the epicenter of all of this, ground zero, if you will. But reports out of Wuhan is that they don't agree. So that they got to get on the same page there. So we'll be watching that very closely. Inside China fears that businesses and factories will be forced to keep their doors closed for good, even those that just recently reopened them to allow at least some part-time work getting done, now shut again. Susan Lee has the very, very latest. Susan.
We heard from Chinese President Xi Jinping this weekend, Neal, calling it a grave situation in reference to the coronavirus. And some say that China will take a $1.1 trillion hit to its economy, second largest in the world. So that has reverberations around the rest of the world as well. Now, Wuhan, you just mentioned it. They partially lifted some of those travel restrictions, but then immediately it was put back on. So there's a bit of confusion as to what the restrictions are. As for a lot of factory floors still being shut, and as we know, China manufactures and produces a lot of goods that go around the world. So the factory floor for many, many industries, from technologies to garments to shoes to autos. And according to one retail consultant telling us here at Fox Business, that China is only running at 70% capacity. And that means component shortages are showing up for other industries as well, from, as I mentioned, technology to garments. And yes, Chinese factories are in the process of reopening, but they probably won't reopen until March. You probably won't get back up to 100% capacity until then. Now, even if production is shifted outside of China to the Cambodias and the Vietnams and other low-cost centers, you still have parts shortages. For instance, they still rely on raw materials coming from China. And as you see, 40% of all imported apparel here to the U.S. come from the Chinese factory floor. According to consultants, they say that 70% of the shoes that are bought in America are made in China. So that has a knock-on effect to the retailers, the Walmarts, the Targets, and the Macy's. Now, what about high tech? Because we talked about this, and a lot of these technology names are also feeling the brunt as well. Apple, as we know, still puts together more than 50% of their iPhones in China, also sells 20% of their goods in China. So this might be a different case, but Apple's really feeling the pain today, down 4.25%. Also, a lot of the chip makers, the Marvells, the Nvidias, the AMDs, they sell a lot of their goods in China. In fact, some of the compiling process goes through China, and even if China isn't the final end product and the final end market for a lot of these goods. But according to analysis, Neal, I guess S&P companies, I think they only sell around 6 to 7% of their sales rely on the Chinese market. But China is just such a large component and a vital component of the supply chain that it really upends everything else from point A to point B. Back to you.
Yeah, you can't get it there or from there, and that's a hassle. All right, Susan, thank you very, very much. Revisiting session lows here at the corner of Wall and Broad when it comes to the Dow Jones Industrials. Now at reading about 1,023 south side here. We should also point out that the so-called VIX, the volatility index, has hit its highest level in the better part of a year, just jumping a little bit more than 8 points for a reading of 25.26. Now, some interpret this, upside down, that if people are that concerned and that fearful, which is a gauge of fear, they can actually put a number on that it's already overblown and that things will calm down. That's what happened last January. They hope it will happen in this particular month of February, but it's way too early to tell. Let's get the read from the Wall Street Journal editorial page writer Jillian Melchior and Point View Wealth Management President David Dietz. David, what do you think of when you hear a number like that on the VIX and the fear that's pretty much rampant and pretty much worldwide? What do you do?
Well, basically, I think it's all about your time horizon. If you have a slightly longer term horizon than this afternoon, I think you actually use this as a buying opportunity.
What if it's tomorrow afternoon?
Well, it's tomorrow afternoon. No one knows, really.
Right.
But I mean, the well-diversified investor, of course, has some bonds, has some precious metals. Both of those are soaring today. Isn't this the proper day, if you've got a longer term horizon, to trim some of those all-time record highs, prices in those, and buy some well-managed companies have a very good long-term future?
So there are a lot of people look at that, Jillian, and say, all right, I own Apple, or I own some of these big names that have gotten me to the party there, and I don't want to get out of it. I've made a heady profit on it. It's not as if I have to sell it. I mean, I'm still making a profit. What do you tell people?
I mean, this is hopefully a temporary thing, but I think just to say it's temporary doesn't fully capture the picture of it. It is something that's going to have an economic impact. And I think we're seeing right now that our global economy is really interlinked. When something like this happens in China, starts happening in Italy and Europe, that it's going to have a trickle-down effect through other world economies. And I do think that's of concern.
I heard one analyst today, David, I hope I got this right. I never believe the Chinese when they tell me something, but I believe the Italians when they do. So when the Italians said, we went from virtually no one dealing with this to now shutting down 10 cities and quarantining 50,000 citizens because of this, that gets me worried.
Well, no question. This has ratcheted up this whole issue and so forth. But I mean, I think I would keep two things in mind. One, we have seen pandemics before, whether it's smallpox or diphtheria. Even 70,000 people have already been killed from the flu just this year, 26 million cases. So it's not going to go on forever. And the second thing is, a purchase canceled today is not necessarily a purchase never made later on. So someone doesn't take a vacation in Italy today, does that mean they don't reschedule for next fall?
So it's like the hurricane effect. You hear hurricane damage and that kind of stuff, and that it's not as if it goes away, it's just delayed.
Yeah, I mean, that's a complete possibility. But getting back to your point on statistics, I do think this has been really concerning because we've seen that the Chinese government hasn't been transparent with this. And this is something that's starting to frustrate a lot of people in mainland China. But essentially, from the get-go, this was given the Chernobyl treatment. This was downplayed. And I think that's something that really compromises the world's efforts in responding to this. And I've got to call out the World Health Organization for praising China on its transparency when it was not being transparent, for excluding Taiwan from participating in this. I think that at a time that we've got something that's not only a public health risk, but a risk to the global economy, for China to be playing politics as it has, it's just not helpful.
You know what always worries me when I follow these developments, David? When people keep telling me to calm down, I can't calm down. I was perfectly calm before they told me, just stay calm. And then I just say, well, why do you keep telling me to stay calm?
Well, it always helps to have an experienced coach by your side telling you to calm down.
Right.
But seriously, I mean, I do think we should not overreact. Although this is a human tragedy, let's not tell people not to go to Chinatown for dinner tonight.
But what if Jillian is right and that the Chinese from the get-go might have misrepresented some things? We certainly know they've done that with economic numbers. We know in the past they've done that with promises on trade. Now we have reason to believe that maybe they haven't been all straight up on this, that maybe we've got a false sense of security. I'm not trying to be panic monger, but
there's no question about it. The black swan could be a black elephant. Nevertheless, that's why we always urge people to stay diversified. But certainly, historically, you should not be selling on the sound of the cough, but rather buying when everyone says everything is fine.
Well, you're a seasoned pro at this, one of the best I know. So I always wonder, when it comes to people of your generation, very savvy all, but now only lately we're told, if the statistics are to believe, sort of dipping their toes back in the water. I'm not talking about you specifically. But I wonder what they do as a result. Do they say, my gosh, I held off as long as I could, I dive in and boom.
What millennials do?
Yeah.
Well, I mean, I think that it's been really heartening watching the way that the stock market has responded in the last year, 2 years. What a good economy we're finally getting to experience. That's a new experience for a lot of millennials. But yeah, I would say don't sell your stock, do buy your hand sanitizer.
Wow.
Two other things to consider. One is the dollar cost average in. So let's say you've been holding back, you have a lump of cash. Don't put it all in today. We don't know. We're just talking about what's going to happen tomorrow afternoon. So put, let's say, a third in today, a third in a month from now, the final third 2 months from now. The other thing, of course.
By the way, you know this stuff inside. The benefit of the dollar cost averaging, you're buying the same amount when it's high, when it's low, it all averages out. You know.
You're sticking your toe in the water. If stocks go up, great. Congratulations. If stocks go down, you can have some more dry powder to put in at lower prices.
A few more shares than you would have otherwise.
That makes a lot of sense, I think.
Okay, I want to bring Rebecca Heinrichs into this, the Hudson Institute Senior Fellow. Rebecca, in the middle of this, we're not expecting you to be a market soothsayer here. You're far more adept at talking about foreign policy defense deals. The president signed a big one with India today, a $3 billion deal that some are saying could be a precursor of bigger deals to come with India. But leaving that aside, I got the sense, just me, you're the expert, I read a prompter, so I think I qualify. But I got a sense that India might be our next counter-China play. And that's what's going on here. What do you think?
Well, that's the plan for the Trump administration. That's why President Trump and the rest of his team, Ivanka has been very involved in this, in cultivating this better relationship with Prime Minister Modi. Both Modi and Trump had wonderful things to say about one another on this trip. And this $3 billion defense bill, it kind of knocks out, it's two birds with one stone, because it's great for American business, because these are obviously American defense companies that are going to benefit here. But India is very important to us strategically, because as we try to counter China, both militarily in the region and also economically. But India is still going to, they still hold a lot of cards in their hands, and good cards, and they know that because of how much the United States needs China. And so they are playing tough. They're playing hardball when it comes to trade.
I just wonder how hardball. I'm wondering too. I mean, we have a better, I think, constructive relationship with India as far as maybe the trust factor. I don't know if it's warranted or not, than we do with China. Now, we were just talking here today about whether we can believe what the Chinese are telling us with regard to how they're handling the coronavirus. We seem to get surprising developments every day, and I'm wondering if that's going to be a problem for China or Xi Jinping or the leadership, because now even Chinese citizens are saying it, particularly the 60 million plus still quarantined.
Yeah, it's a huge problem. I mean, communism lacks transparency. And so when you have something as bad as this outbreak, and we're not sure how bad it's going to be, and we're obviously praying and hoping it's not going to be this global pandemic worse than what we're already seeing, we need the Chinese government to share information about what they have, and they have not done so sufficiently to allay a lot of our concerns about the causes and where it's coming from and exactly the nature of it. And then you have that backlash from the Chinese people, who have been told that the Chinese Communist Party is there to protect them and to do good for them. And these are not, they're not cultivating trust into their government if the government's not going to tell them what's going on and being transparent. Again, the Chinese Communist Party cares much more about their reputation and guarding it than they do about, the transparency and caring for their people. And you can see that it's having a negative effect here.
Yeah, and both are suffering. Jillian mentioned it, and we were exploring this last week, how similar this sounds to the knee-jerk reaction to the original statements the then Soviet Union put out back in 1979 on Chernobyl, and they were proven wrong, and they kind of downplayed it. And I'm just wondering whether you think that is going on here, because that took a long time from the then Soviets to come out of all of that. And
it does,
I'm wondering now what happens.
Well, I mean, at some point you just got to, the Chinese Communist Party just needs to say, they just need to be forthcoming, and they need to say, this is what we know. They need to let in American doctors. They need to let in some other Western doctors, which the United States has pushed for. And again, transparency is what is going to allay concerns, and it's going to allow the genius to be unleashed cooperatively to try to take care of this problem that the United States and other countries recognize. As it spreads, it's obviously going to have effect on the market globally. It's going to have an effect on tourism, and obviously you don't want it to come into your own country. And so there's some concerns about the well-being there. And this is something, though, this isn't just on this particular issue of coronavirus. The Chinese government has not been transparent about their intentions, about their military program. We want to know about their nuclear program, their missile program, and they have lacked transparency. And you can't have a healthy partnership with a country that isn't going to be forthcoming, give you reciprocity and transparency. And so because of that lack of trust, it's going to hurt China, I think, in the long run.
Yeah, you don't get a second chance to make a first impression responding to a crisis. prices to you. Rebecca, thank you very much. Always good. I appreciate it.
Thanks, Neal.
Let's take a look at what's happening at the Dow. Dow still down, revisiting session lows here, down 1,067 points here. A lot of that money, you always wonder where it goes, has been flocking into Treasury notes and bonds. Interest rates have been tumbling. Gold has been soaring. David, when you look at that, rejoined by David Dietz and Jillian Melchior, by the way, that might provide a floor to this. Of course, I said that 200 points ago. But what do you make of that interest rates are tumbling? There's growing talk. The Federal Reserve might have to do something.
So two aspects of that. One is there is a silver lining to this flight to safety is that interest rates are coming down. One of the most important industries in our country, of course, is home building, home sales, and construction and so forth. That certainly helps that people are taking home equity loans out. The other thing, of course, is
and that was happening before.
Yeah, but it's now accelerated.
Right,
it's going to cause more banks to lower their rates and so forth. The other thing is prices at the pump haven't been cheaper for years now. And for a lot of low-income Americans, what they have to pay to get to work, to go and travel, so important. That's helping them there too. And of course, the other thing is the Federal Reserve. I think ultimately, I tell my investors, let the Federal Reserve blink before you blink in the face of market volatility, because of course, all eyes are focused on them. Now with the dollar soaring, our interest rates so much higher than across the seas that they're really under pressure to lower rates, I think, as early as next month.
Wow. You know, Jillian, the flip of that is who needs the Fed to do anything, right? I mean, market rates are coming down.
Yeah, we're undoubtedly in a good economy. And I think what we're seeing right now is the combination of the tax cuts, of Trump deregulation, all of those things, you know, America's energy renaissance, all of those things cushioning against international risks, international volatility. This could have been much worse if it had been under an Obama economy.
Well, look, let me throw this out to you guys, the Bernie Sanders effect. You've heard about the healthcare effect, and those issues are taken out of the chin. That is his strengthening position in the polls. Obviously, we know what he thinks of the insurance companies, the healthcare providers. They're ripping us off. They're robbing us blind. And now that he looks like he is really amassing much more support than many figured, he could be the nominee. It doesn't mean he's the next president of the United States, but it's putting a pall over this industry. What do you think?
Well, it may. I mean, certainly his agenda to extend, he talks about more taxes and giving people everything free is probably not, in higher regulation, perhaps is not helpful. But on the other hand, it is such a complicated stew there, because does this mean he's still going to, is he actually going to get the nomination? Does this actually increase Trump's chances of winning because he's up against Sanders, who may not appeal to the
that's
middle?
what I would think, and not to play the politics of it, that he looks so unlikely a victory against Donald Trump. Now, history proves that wrong again, including Donald Trump's emergence, that the markets might celebrate a Bernie Sanders.
I would argue that he's set the tone of the Democratic debate. So since 2016, I think that we've seen not just Bernie Sanders way out on the socialist wing of the party, but the entire Democratic Party takes several steps left. This is not, you know, it makes Obama look like a moderate. And I do think that that's a real economic risk. We're talking about Bernie Sanders coming out with a plan today on childcare. We're now talking $1.5 trillion. I remember when $1 billion plan was a big deal.
And you're young.
I think, young. Yeah, and $1 million plan was a big deal before as stimulus. I think we're starting to see this growth of government in a way that is a really stark contrast to what we've had before.
Well, let's look at that Bernie Sanders phenomenon, guys. I want to bring Vince Colonnese into this, the Daily Caller editorial director. And Vince, I mean, you know, I'm the one who made the leap here, not rational thinking people, me, about what's happening in the healthcare arena and whether that has anything to do with the emergence of Bernie Sanders as a real threat. I'd say threat in the idea of a force to contend with the Democratic Party and maybe a likely nominee. And that is looking a little bit more likely than it did prior to this weekend in the Nevada caucuses. What do you think?
Yeah, I think he is the clear front runner at this moment, and the clearest expectations we have for the convention are either he walks away as the nominee, or we have a contested convention, which will be a lot more drama that will almost certainly result in the Democratic Party losing in the general election, given that they will have a deflated base on either side of that coin. When it comes to Bernie and healthcare, you know, it is true that in the 2018 midterms, Democrats ran on the energy of healthcare concerns. Definitely voters who say they were voting for Democrats did that on the basis of healthcare. But you have to remember that the gains that Obamacare made in terms of actual insurance coverage were pretty slim. It was somewhere in the mid-80s to the low 90% of getting coverage in the United States, healthcare coverage. And now what Bernie's talking about is that last gap, that from that 92% point to 100%. And that's also the most expensive gap. And it's going to cost people a lot of money, including It'll get them off of their private insurance. You saw the culinary union expressing a lot of trouble with that in Nevada. And right now, I think it's really going to come down to, for Bernie, can he basically sustain the energy he has, and can he figure out a way to convince moderate Democrats that his socialist programs are somehow digestible?
Well, he has expanded beyond his traditional base, right? Now, Nevada is not the country as a whole, but it's closer to the country demographically than, let's say, Iowa, New Hampshire. And that he picked up support from groups, even Joe Biden's African-American, lock is now in question going into South Carolina. If he were to somehow win in South Carolina, then what?
Well, then that would, I think, set the stage for a glide path to the nomination. I mean, South Carolina is, as Joe Biden said many times, his firewall. But honestly, once you get past South Carolina, it looks to me like Bernie's headed for near a majority. If not, then either of those two scenarios we're talking about. It's hard for me to imagine any candidate, Michael Bloomberg, Joe Biden, or otherwise, getting within spitting distance of having seriously offering a threat to Bernie Sanders' ascendancy.
Still early. We shall see. I want to thank you very, very much, Vince. In the meantime, we are keeping an eye on some of these other developments, what's happening with oil, gas prices. David was just telling us about how that could be very favorable for consumers because price of gas, heating oil, that's collapsing right now. And that on top of the lower interest rate environment, it's a good 1-2 kind of nice punch for average consumers. Let's get the read from our own Phil Flynn, Jeff Locke, there at the CME with the very latest. Gentlemen.
We're about 15 cents from the lows of the session in oil, Neal. We're at 50.63 last trade. Here's a man, Phil Flynn, who this morning to your investor clients, the headline on your morning report was "Time to Panic."
Time to panic. That's right, because the markets are in panic mode.
Did you know that the market was going to be down 1,000 points?
Well, I knew there was that possibility. I really did last night when we started to see the headlines of how this coronavirus was spreading across the country, the mood of the market coming in. We knew it was going to be an ugly day.
But Phil, here's the deal: we've lost how many people to coronavirus now? 2,400, right?
Something like that, right?
I am told by reasonable, reliable sources. Flu kills 300, 400,000 people a year.
It does.
Why are we so freaked?
Mainly because of the fear that we don't know where this is going to end and whether they can contain it. Every time we hear that it's not going to be a pandemic, we hear different cities getting shut down. That means demand destruction. That means supply chain. We don't shut down factories when we catch the flu.
You're an oil bull, typically, and you, long-term, think oil is going to come back from whatever it goes down to, but this demand destruction is very real, correct?
It is very real. But, I think we've priced in a lot of it. I mean, if you look at from the peak of this, we're probably down, from the peak almost 25% from the high. Listen, every demand destruction event like this in history has been a buying opportunity. The question is when.
You buy in today?
We're starting to buy right now. We're recommending right here on the lower Bollinger Band on the S&P is an area to at least step in and start to buy. So even though I don't know if we're going to bounce back today, I think there's a high probability that the market's going to close higher tomorrow.
You sound like you have the flu. It's not corona, is it?
It isn't coronavirus, no. I just spent a little time in China. Nothing big.
Get away from me. Get away from me. Okay, Neal.
Was he referring to, in other words, buying the S&P futures contract, right? He wasn't talking about buying oil. Or did I mishear that?
Yeah. Well, no, he was talking about buying oil. You're talking about buying oil at 50.5.
Yeah, I think $50 is a good area to buy.
You would buy now.
I'd be very cautious. I'm picking a bottom stage. It's not for everybody, but from a technical viewpoint, you should be buying now. And I think that this downward move in oil is probably going to get OPEC to move and do something on production.
Okay, there you go, Neal.
I just wanted to lock him on tape in case he's wrong that I can replay that. So thank you, Jeff, for helping that process along. No, you guys are great together. I tell you, Martin and Lewis. All right, in the meantime, we have the Dow down about 1,042 points. It is in negative territory on the year. The S&P 500 in negative territory on the year. The NASDAQ bucking that. It had been up about, I think, David, 8 or 9% going into today, even with everything else going on. So it is holding on to positive gains. How long do you expect that lasts?
Well, I mean, short-term forecasts are fraught with hazards, but certainly we've got a lot going for us. One is with these record low interest rates. The 30-year is now below 2%. That's below the rate of inflation for the next 30 years.
You know, a 30-year mortgage, some are aggressively pushing 3 to 3.25% mortgages.
Yeah. So that's a tailwind for the market, of course.
If people take advantage of it.
If people take advantage of it, but a lot are just going to.
Julian might hold tight.
but there's a lot of refinances, so people are taking the money out to do projects that they want to do.
You know, that is refinancing. I keep jumping on you, but you know, your brilliant point is backed by facts here. It's running at a triple-digit clip year over year, the volume of refinancings. That's going into today. That's amazing.
The other thing, of course, is the big bogey over the decades has been inflation. Inflation's disappearing, and of course, we're not going to see it for a long time as the value of the dollar continues to soar. That makes whatever we import make that much cheaper, and so forth. And so that's a big positive. And you got record low unemployment. You've got corporate earnings are coming in better than expected. So there's a lot of reasons to be positive.
Now we had low interest rate periods before, but people don't pounce on them right away, right? And the meltdown took a while when interest rates effectively went to zero. But they cooled their jets a while. They didn't jump into it. Right?
Yeah, but I mean, I want to just come back to this point about the strength of the economy, because I do think this is really crucial. I mean, we are looking at this narrative of tax the rich, that the system is rigged, and yet we're seeing wage growth. We're seeing really tight labor market. We're seeing historic unemployment among traditionally marginalized groups. All of these things happening at the same time as a conversation about socialism, I think, is just intriguing.
I like the way you said intriguing. All right. We shall see. Funnier things and stranger things have happened in the past. We are also looking at what's coming out of Italy right now. What made this a unique day and why maybe things worsened to the degree they did. We expect bad news or problematic news out of China. We expect Asia and problems in South Korea, several incidents in North Korea. We are not prepared when out of the blue, Italy comes forward to say, we got a problem too, not only a number of deaths, but so much so that we are shutting down, essentially quarantining 10 of our most prominent cities. That's better than 50,000 people. No, it is not 60 million as in China. But for Italy, it is unprecedented. For Europe, it is darn near unprecedented. What's going on there after this?
Bulls and Bears is getting extra Fox Business heat from Dagan McDowell, Charlie Gasparino, Deirdre Bolton, and Lou Dobbs.
You'll love what's next.
Join David Asman for Smart Talk and Insight Wednesday on a special Bulls and Bears.
Ah, there it is. Kawhi, what are you doing here?
I'm blocking you from overpaying.
Well, finding deals is hard.
Nah, acting in a commercial is hard. Saving money is easy. Just use Honey. Let me show you. Just click and save.
Thanks, Kawhi.
This laptop is tiny.
It's normal size.
You can get the best deals at joinhoney.com/MVP.
Attention anyone on Medicare. 2020 Medicare Advantage plans are now available. Did you know you may now be eligible for additional Medicare-approved benefits, including dental, vision, hearing, and prescription drug coverage? The toll-free Medicare Benefits and Questions line is now open to help anyone on Medicare make sure you are getting the benefits you deserve. Just call 800-921-3503 now to find out if you're eligible for a Medicare Advantage plan that includes additional benefits like free hearing aids, free eyeglasses, free meal delivery, and free rides to medical appointments. You may also be eligible for $0 monthly premiums, $0 deductibles, or no copays. Just call the toll-free number on your screen now to see if you qualify for additional benefits. There is no obligation to enroll. The call and Medicare benefits review are absolutely free. Did you know you may be eligible for additional benefits with a Medicare Advantage plan that includes additional benefits like dental, vision, hearing, and prescription drug coverage, free hearing aids, Free eyeglasses, free meal delivery, and free rides to medical appointments? Just call 800-921-3503 now to find out if you're eligible for a Medicare Advantage plan that includes additional benefits like dental, vision, hearing, and prescription drugs. You may also be eligible for $0 monthly premiums, $0 deductibles, or no copays. Call 800-921-3503. 2020 Medicare Advantage plans are now available. Just call the toll-free number on your screen now to make sure you're getting the...
All right. Hope everybody has pretty much stayed clear of any craziness today. I, on the other hand, have been very selective in my trading and made some pretty good trades, actually. Let me start here by just kind of going over my trades, and I'll show you where I got long first. First trade of the day was right here on this candle right there. I went long right at that 200 period moving average, and then took it to a new high. That was my big winner of the day. Second and third trade came together right here. So if you look at second and third trade here, entered long here. My stop loss was right there. I got triggered, but as soon as I got triggered on a stop, I learned that that was a fakie setup, right? So I entered long here and took it up here. Now, I did not make, actually, no, I didn't. I didn't take it that far. I just scalped this to try to make up from this loss, and I did. I made up everything but a few bucks on this trade, so this was a scratch trade. And then my fourth trade of the day was right here just now. There was a couple other really good trades that I didn't take. This was a really good trade right here. Same deal, had a fakie, and then it pushed up. You know, a lot of fakies going on right now. What I did was I waited right here, right there. We had the support underneath right here from this morning. So I jumped in right there at the open, or at the open of that next candle there, and took it up for a little over about 10 points there. So that's the crazy thing about this market right now. You can get 10 points very easily if you just wait on the right time to strike. So that's what I'm doing now. I'm just kind of being patient. That's a pretty good sell candle right there. Just remember, these things are coming in fast. These sales are, you know, they're coming in fast and strong. So just be aware. But we're so overdone. It's really hard for me to see a continuation. I'm a contrarian by nature, so I look for, you know, since we're down in this zone right here, you know, past the -3, right? I'm looking for buying opportunities, obviously. I think that, because look, when we do get a buy, look, it runs 20, 30 points. We get a buy, it runs 20, 30 points. You know, we get a buy, it runs 20, 30 points. We get a buy, it runs 20, 30 points. We get a buy, it runs 20 points. You know, we got a buy up here, it ran 20 points. We got a buy, let's see, where else did we get it? That was it this morning. But with this opening candle, you know, that was a potential buy. It ran a lot of points. So we got a lot of upside in this down market, you know. So there was a lot to pick off long on this down market. Now, you could have went short and just racked up, but you know, just because of where we are, I was seeing it a little bit differently than most. And I think that's required to, you know, almost be a successful trader. You got to remember, 90% of the traders are seeing one thing, right? The rest are seeing another. So you almost have to be an opposite by choice to take advantage. Not saying that you couldn't have taken this short and completely crushed it. Neal had a beautiful play there on the what was that? Back up in here somewhere, I think. So he was short somewhere in here. It got stopped out on this candle, I believe. But then it rolled over all day for him. So I think he was short somewhere in this area. And if I'm not mistaken, it ran down about 140 points from his entry, which is amazing. So now we are getting into the afternoon. We're trying to change momentum here, but we got to break out of something to show a change in momentum. What a beautiful entry there. I was in right here. Knew it was going to pop, but I did not know it was going to pop that far. I wrote it for just a scalp, which my entry was 95.56. Currently was about 50 points to the good side right now. 5 contracts. It was, I could have really racked up right there. I could have racked up on all these trades, really, except for my first one. The first trade, I really squeezed out as much as I possibly could. The second trade and the third trade, I did pretty well on that one too. And the only one that I really didn't squeeze as much out on is this one right here. So that's the only one that I was in here. I bought this right here and I was out there. And you see how much I left on the table there. So, if this thing just continues doing this thing like this, making lower highs and lower lows, this trend is going to continue. Obviously, if something doesn't happen where we break up out of this level, that is our main level at this point, guys. So we are running out of time to get back up here to 91.80. I don't think it's going to happen today unless something crazy happens. But first and foremost, the first test would be to get up above 91.21. That would be our first line in the sand. And actually, really and truly, a more respectable area, we could possibly be even like 91.16, 91.15 area. So somewhere in there. But look how it's just continually putting in this. Look at this lower high, just came off of a lower low. It's just trending so nicely. It's got a really nice trend going right now. Really nice trend. So we'll continue to watch it. We'll see. If you're trading a channel, we just broke out of that last push. We actually broke out of the channel. So kind of just ranging in that area now. But we definitely have to break out. Of that level if we're going to continue higher, but it's trending so nicely, Look at that perfect short right there too. If you were short here, 90, 98, down to 84, there's a beautiful scalp right there. So, hey Ron, yeah, just kind of going over that trade. I just got long right there. I don't know if you saw that. Got long there, took it up to here, left about 50 points on the table there. So that kind of stunk, but it's all right. And then Had a trade here. Had a trade, 2 trades here, and then this trade right here today. So I missed this trade. I didn't take it at all, and that's really about it. And then all these tips, all these peaks, these lower high peaks have been beautiful shorts. So if you're wanting to ride the trend, boom, beautiful. Me, I just, as we're so overdone, I look for those pops. And the thing is, with these pops, this right here to here is like 60 points. So it doesn't, yeah, we're trailing negative, yes, but when you find a good reversal, you see the support line right here? This reversal came in right there, pop, boom, 10, 15, 30. That was a 50-point move right there. This move right here, 10, 30, 40 points. This move right here was huge. This move was 20 points. And then my trade this morning, it was 20 points. So, it's been good. We've been able to range up enough to cycle and, actually get enough pointage. This has been a beautiful voluminous market. Plenty of volume, plenty of opportunity, long and short. Long and short. So, we'll continue to watch this and just see what happens. Just continue to watch and see what happens here. It's a nice short, very obvious to see right now with the trend for a nice little 10, about 16 points to the downside. So if you got short here, boom, that's 16 points. This was huge. This short was huge. This short was huge. This short was huge. This short was huge. So plenty of opportunity both ways. All right. I'm going back offline here until 3 o'clock. 3 o'clock, I'll be back. We'll see how this thing power hours out. See if I can get back up there to 9180. That would be something, wouldn't it? We'll wait and see what happens though. So till later here. 3 o'clock, I'll be back. Hey Barnes, are you still with me? I just saw your comment there. I had the mic off. Didn't want to leave you hanging there if you made a comment there. Just let me know if you're still there. I'll explain to you if you're still here. If not, then I'll I'll back off. I'll go back offline. Just saw your comment there from Periscope. Barnes, can you hear me? Testing 1, 2. Hello. He came and then he left. And to think, I was long in this market right here. I was long at 9,055. Well, yeah, Mike, I got 10 whole points out of that. uh, got 10 whole points. So let me put it in perspective, all right? Check this out. I was long right here, and I got out here. And, you know, you can see where we went. Yeah, still a green trade. I'm happy with it. I wasn't really trusting anything. I mean, to buy, you have to have guts to buy right now anyway. So I was in for the quickies, you know. But every long trade today has been great. That's the crazy thing. Like, even as downtrodden as we've been, I mean, every single long has given you 10, 20 points. Every single one. 10, 20 points, 10, 20 points, 10, 20 points. And then this big one down here give us, 50, 60 points. So, man, that's crazy. I mean, the shorts have been great. The longs have been great. You could literally make money on either side of the market today. I mean, it's a crazy day, but it's been a crazy good day. So, I'm pretty happy with it. I would really love to see Power Hour come in and we get pushed up. I'd really love to see them just run this market up, That would be fan-freaking-tastic. But it's whatever. Whatever they want to do at this point. I'm not trading anymore today. I've locked my gains and I'm staying safe. No crazy stuff coming from me. I had my crazy time last week when I went into full-on gambling mode and gambled away about $400. No more. Not going to happen anymore. Not going to let it happen. Where do you think this thing ends, Mike? Where do you think it ends? Do you think we peel back down? Close real red on the day, or do you think we make a fight back? I think we're going to continue this trend. We did break out, which is the first time we broke out all day. I'm thinking they're going to try to get it back up there at least -3. A long way to go, though. They might come in shy, and then aftermarket might push it up. Mike, I'm getting a 200 period moving average in the 9400s on the 15-minute chart. Getting an upper Keltner. It's like 9180 something. I don't know. I'm going to hope for the best here. Because the thing about it is, if this thing can push back up, it's going to make it a better trading day for tomorrow because it gives a structure to the downside and to the upside. That makes sense. So, and that's what we can hope for, is structure, near-term structure, both up and down. That's going to help us out with determining a game plan for how to take this on. Okay, so we're at the 200 period moving average right now on the 2-minute chart. And it's rejecting it right now. Now look how close the 20 period moving average and the 200 are coming in. All right, so we got really wide. They came back. We got really wide. They came back. So I need to change the color of that 200. Well, folks, who called it? Can somebody give me a pat on the back? Oh, my gosh. Can somebody just say, Trae, you are the man? Did I not call 9180? Who? I know. Sorry, Mike. I didn't know you were on Discord, dude. I didn't know. I didn't know it, so I thought I'd brag on the stream and not brag in Discord, you know? Holy crap. Is that not awesome? Huh? What? What is that nonsense? What is this crazy sorcery that Trae develops in his brain and comes up with these? We were over 100 points away, and Trae's like, oh, we should buy this. It's going to go back to 9180. It's got 99.7% odds. Ah, no, it's going to go down. It's no. There it is, folks. Boom. Boom. Whoo-wee. Exciting. Sorry. I'm a little excited. That was awesome. Oh, I didn't get in on it at all. I'm done trading for the day. I got out. Now, listen, my original position, I was long at 90, 50, 90, 60 area. Somewhere in there I was long. We just touched 9180, which is, I don't even know how much. That's close to what, 200 points, something like that. I know you did, Mike. So did everybody. It's okay. See, you'll learn this stuff with me. You'll learn over time. You can trust old Trae, because most of the time he does all right. Sometimes when he screws up though, he screws up really good. All right. That's the problem with me. I can call these wild things that come true, but when I do screw up, it's usually epic. Ah. No, it's good, man. Hey, I was doubting it myself, to be honest with you. I called it out earlier, and I really wasn't expecting it to do that. You know, it's kind of just one of those things, but you know, it just happened, and now you got to be like, woohoo! I did that. I called that. Well, in reality, it could have not went there too, but I'm telling you guys, these deviation levels are what's up. They're what's up. You know, a tall tale sign that we were going back to that -3 deviation at least was this final breakout right here. You know, all day we trended down until right there. We finally broke over that trend. As soon as we broke out and held that trend right there, it was on. Straight up from there. Wow. Okay, so let me go back in time here. Called that at 11:59 a.m. 11:59 a.m. right here. So this is where I put that in Discord. And y'all are like, no, he's crazy. I even posted the bell curve. I posted the actual 9180 level. Insane, man. Insane. Whew. It's exciting stuff. Exciting stuff. Hate I wasn't involved, but you know, it's all good. I'm happy. I'm happy. I'm happy. Make a call like that and it actually come true. You know, really, really, really is awesome. Odds. Playing these odds, man. Playing the odds. You become the casino. All right, guys. So we got an hour to reflect off of this level and close back up inside it. Hey, we touched it. That's our goal, right? We touched that level. Um, 90, 97, 99.7% chance we can close inside this thing now that we've touched it. So let's see if we can close inside. We may not get it before the end of the day. We may do it in after hours, which is okay. It's okay. The fact that they just ran this thing up as far as they did is insane. So you expect to sell off here at the -3. It's pretty obvious that that's going to happen, right? Profit taken there. Let's see if they catch it right here around this 20. We're through the 200 now, so we still got about an hour of trading left to continue pushing. So let's see if we can continue pushing. Oh, dude, it was beautiful, man. Beautiful. All day has been beautiful, man. This day has been just a gift. Long and short. Either direction. Whichever way you wanted it, you could have had it any way you want it. Long or short. 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 Long all the way back up to 91.80. Just insane, man. Just insane. I cannot wait to see what tomorrow holds. Great day. Great day, Mike. This day has been just terrific. Tomorrow's going to be even better. I don't know, but I can tell you this. Now that we've moved up in our last hour, and if we could continue and end on a bullish note, here's the thing. Look, now let me scroll out here so you can see. Depending on where the deviation levels plot, you can't see that. Let me scroll it out a little further here. Look at here. So now this is a 4-hour chart here. So now we've got, if we can end up here and do some pre-market pushing, so some upside I would hope for. Now, look how severely overdone we are. We're below the 200 period moving average. This is still a bullish market on the 4-hour. Let me explain to you why. Until otherwise noted here. Although we've had a massive drop, I want you to look at where the 20 period moving average is and the 200 period moving average is. 200 and the 20 have not crossed. We're still up, so this thing can dip down and do like that. I'm not expecting to ever get back up here. Really and truly, I think if anything we start ranging, but I could be wrong. But with this push, it has given us structure for both the for tomorrow for these deviation levels. Really good structure to the downside and to the upside. So we're going to have, structure here. We're going to have structure here. So, we're going to have some good structure going into tomorrow as far as your deviations go. And we'll be able to start planning for these POCs. See this one here? You got the POC here. You got a Monday POC. Tuesday POC is going to be down in here. So you got all these POCs up here from last week and today that are going to want to get touched. So that's a thought. That's a thought process right there for sure. And expect it to sell off a bit. No big deal. And it could continue selling. We've got an hour left. We touched 91.80. That's the important thing. So let's see how this day closes. I'd love to see it hold some of its gains and just give us some of that structure for tomorrow. The more structure it gives us for tomorrow, the better. All right, guys, we got about 30 minutes till 4, but we don't. Market doesn't close till 4:15, so just remember that. Still got a few minutes left. Try to get back up above this 91.80 level and hold it. That's what we're looking for. Back up above this and hold it. It's going to.
I think that's a winning combo, and that's ultimately how we combat this, both on the industrial side as well as from a matter of public policy.
Sean, if you had to guess, when will we see this fizzle out? We know that viruses sometimes do that. They hit peak. We're not at peak. I have studied this at the moment. We are far from peak, particularly considering we're not getting truly transparent numbers from China. So where do you see this going? How much longer?
So to be clear, I have a PhD in molecular genetics. I've applied my career toward health, again on cancer, cardiovascular, reproductive health. Invitae as a company is building that sector. What I could offer, the only thing that I feel comfortable opining on is that the good folk at the CDC and the WHO do have the global view in mind. We're best to follow their advice. And again, I think this is something where, collectively together with the use of modern technology, I think we're going to be on top of this.
Well, thank you. And we'll end on that note. Sean George of Invitae, we appreciate it. Let me get to Christina Partsinevelos. She's over on another part of the floor of the New York Stock Exchange. Give me some movers here, Christina. Up or down?
Some movers up or down. Look at, and we're going to focus in on my face too while we're doing this. It seems like some of the algos are coming in right now. They're given the upswing. I want to talk about bond yields if we can, because the bonds in general have been telling us a completely different story than the markets. What we're seeing with the yields falling so down, you're seeing the inversion just over the past several business days. Why is that happening? That's telling us possibly that economic growth is going to slow down. So that's one catalyst for the fact that you're seeing yields so low. Another major catalyst too is investors really didn't know how to price in this coronavirus. This huge upswing in the number of cases in Italy came to a big surprise for a lot of people. The fact that they're stopping the Italian visas, travel. I was talking to another trader too that looked up just for fun flights to Milan. There's 32 first-class seats available on a flight this evening, as well as 130 seats total available overall. So you can see that it's halting travel. It's going to affect the airlines, but Liz, as I've been saying from a lot of traders overall, this is not a sign of the fundamentals of the market as a whole. What we're seeing is the coronavirus and how we can actually contain that. So you're seeing certain sectors, especially those exposed to risk in China, getting sold off right away. But overall, that's not necessarily a reflection of those fundamentals for a lot of these companies, especially those based in the United States.
You know, I got to ask about the FANGs, because if you wanted them but you felt they were too expensive, they're definitely cheaper at this hour, with about 32 minutes left before the closing bell rings and the Dow down 866, right, Christina?
Right, exactly. So should you
Trae,
be
there?
getting in would be the big question.
Oh yeah, I'm here. Watching the
Did
news.
you see the CME price limit guide that came out?
To one trader about that, because Apple
Yeah, so
issued a warning
they're doing there's a
so
price
what's stopping
limit.
a lot of the other tech companies to do the same. Facebook, huge sell-off
It says
today.
the
Look at
price
that,
limit
down
is the
4%.
maximum
A
price
week
range
before it was
permitted
down
for a futures
5%.
contract
So
in
we
each trade in session. When markets hit the price limit, different actions occur depending on the product being traded. Markets may temporarily halt until price limits can be expanded, remain in a limit condition, or stop trading for the day based on regulatory rules. So apparently there's a trade in halted levels. It says the CME Group, U.S. Equity Index price limits and corresponding CME and CBOT rules are designed to coordinate with circuit breakers provisions as applied by the New York Stock Exchange. 7, 13, and 20% price limits are applied to the future fixed in price and are effective from 8:30 a.m. Central Standard Time to 3 p.m. Central Standard Time, Monday through Fridays. 5% up and down limits are effective 5 p.m. to 8:30 a.m. Central Standard Time, Sundays through Friday, and 3 p.m. to 4 p.m. Central Standard Time, Mondays through Friday. Between 3 p.m. and 4 p.m., the 5% price limit will not be allowed to breach the 20% daily limit. And then it says the fixed in price is the volume weighted average price VWAP calculated during the 30 seconds of trading from 2:59 30 seconds p.m. to 3 p.m. Central Standard Time. So I guess they're provisioning some things based on like the market volatility that's been happening today. What's up, Ron?
Okay. All right. That's crazy. That hadn't affected me on at all. I've been able to get in and out of trades easy. Just push of a button. No warnings or telling me I couldn't do it or anything like that.
No, yeah, I think I mean, I don't know if it's like it just came. I think the email just came out.
Okay.
128, 128. I don't think you've placed any trades since 130.
No, I haven't.
You know, and I know I haven't. I've been extremely busy.
Well, they are betting on like 100% on, they're saying that at least the news here's pretty confident that it's 100%. It's 100% coronavirus, no fundamentals of any other market other than just the downside to the
Coronavirus. Yeah, that's what I'm seeing out here on CNBC also. Yeah, I've been listening to it. Been listening to it all day. So that's what it seems like is obviously the factor that's happened. That's what's going on. And I mean they're constantly. I mean they're talking about where to put your money. In this situation, which is obviously into like gold and silver and
right,
or even just going pure cash.
Yeah, just liquidate. Just hold liquid cash until you.
Which is what I just did. Like I liquidated myself. So I'm pure cash right now. Which is fine. I'll reevaluate positions as time goes on. It is nice that we did come up off of these levels here, down here. 90.49. It's kind of nice to see that, which was pretty much the 300. No, it's less than the 300-day moving average. So we fell below the 300-day moving average again, but came back and now we're trading above it again, which is kind of good to see. Just
Absolutely.
just wonder what's gonna happen.
Yeah. Definitely interesting. I'm hoping that we get back up above 91.80. At least that'll be price within data. If you're priced outside of data like that, if you're outside of that point, that 99.7%, then you're this is just a super rare day. Very rare.
Yeah. And that also then changes deviation levels for tomorrow too. That means like our 2 deviation levels will be pretty far down.
Yeah.
So negative 2 deviations.
I'm not sure I understood
It's still
that.
it's still already looking like it. Yeah, that email.
Yeah.
Yeah, me neither. I was reading it so maybe you would understand what was happening there too. But it looks like it's like trade and halted levels, which is basically what the levels where they're going to halt trading. I guess anywhere between 7, 13%, 20% price limits applied to futures fixing price. So it means like if we moved like 20% or something like that. I mean, we did move a lot, and we're not even at 7% yet. We're not there. So we haven't even hit that.
Right.
But maybe what they're anticipating is like potential for us to fall that far. Like, dude, that would be below 9,000.
Yeah.
I've just never seen this, fall like this since like 2018.
Yeah. See, I didn't get an email like that at all.
Would you touch the airlines? Because I want to show you something, Byron. Come this way. We're looking at Delta Airlines at the moment. So Delta's down 6%. We're here at the Delta Post at the NYSE. DAL, very tough moment here. It's down $3.61 to $54.26. 25 minutes left in the trade of the day. Would you go anywhere and pick up some of these airlines that look like they're 6%?
Looks like we're going to sell back off here in the last 20 minutes. Well, you got to think we got about 35 because we're going to trade till 4:15. So just remember that. We're still bullish. We still got the 20s crossed over the 200. Let's see if we can find support at the 200, and let's see what happens here.
We got to wait till the second half.
Yeah, that's what I'm looking at. See if this holds support. If not, man, nothing goes underneath it. Could be interesting. 30-minute chart. We're failing that 20-day moving average right there.
Yeah.
The World Health Organization says it's not a pandemic. Wall Street's acting like it is.
I love how they act. I love how these like news anchors are like so happy and giddy on the floor, on the trading floors. They're like, giving the news. It's like, oh yeah, we're collapsing. What a great day. Let me interview these people. And all these guys down on the floor ready to put a gun in their mouth. And it's like this woman comes up and is all like, hey, would you like to do an interview? No.
It's like, no, I really don't.
Like I want some water to drown myself. That's what I want.
Yeah.
We do appreciate it, folks. Before I get to Charlie Gasparino, I want to show you over here, and we can look at some of the foreign.
They're talking about the V-shaped recovery right now.
These, of course, Brazilian companies here, and
Jeez, and that's Charles Schwab on the phone saying we don't anticipate a V-shaped reversal yet.
Man, the heck with Charles Schwab.
They're so rude.
The heck with Charles Schwab.
They classified me as a pro.
Made me pay for data.
Did they really?
Yeah, I can get it. I can get live data, but if you got a pro account or they classify you as a pro account, you have to pay for data. You only get free data if you're a retail trader. That's what makes me so mad. So they took my real-time data. I have no real data. Only on futures. They give you futures because it's not the most popular thing, So I got lucky there. Yeah, man, that's what this whole cuss fight was about, man. They took my data.
You and I, we didn't really get a chance to really talk about that. Yeah. Damn, dude. I did not know that.
Yeah. And they won't give it back either. So the only other options is probably open up an account in my wife's name.
Yeah. That's what I would do.
The thing is, we actually own 2 mailboxes, so we actually own 2 mailboxes. We own 2 separate mailing addresses, so we can use either one.
One thing that I keep hearing from traders, Liz, is that, they factor in worst case scenarios of this disease. Like, how many people will it kill?
Dude, today was just absolutely nuts. Like work-wise, man. Like there were so many opportunities to make all my money back. So many.
And you didn't lose much, man. It wasn't a bad.
I didn't lose a lot. No. Dude, I made back some of it. Like, dude, I'm only down like half of what I was. So it's not bad. It's just that, I would have been well green. Would have been well green if I was sitting here, able to do stuff. And I mean, who knows what's gonna happen right here, man? This thing may just break down.
Freaking hope not, man.
That is happening. So there's going to be something scientific coming out of this. We should point out that the FDA process is very laborious. It takes a while.
It almost looks like it, right?
That's in the works for a while.
Yeah, I'm just glad we got up there and at least touched 9180.
You're going to see some sort of scientific response to this. Some of these companies are public, some of them are not. The federal government has to be careful because a lot of these are sham products. It has to go through the process. But clearly, there's going to be a scientific response to this that will be reflected in the market. So I would just say this to the average investor. I don't think this is the end of the world. This is not 2008. There'll probably be some GDP impact on it. That doesn't mean that there isn't not a lot of good stocks out there. Right. That doesn't mean this is 2008. And that doesn't mean 1,000 points at Dow 30,000 is really that meaningful when you think of it.
Right.
And it might be a good time just to take
Yeah.
some perspective. I'm
Dude, the
telling you,
bot's been on point today, man. Every single time it alerted, it was a grand move, man. Like great freaking
Mm-hmm.
move.
Every single time.
Like the short at the right here.
A big investment guy. He has a big venture capital firm. He also deals with mergers and acquisitions. He said to me, Liz, I am selling all my equities to
Wait. What would Axelrod do right now, man?
And I said, okay, why? And he said, I think nobody understands
What would I do right now?
No. The actual Axelrod. What do you think he would do?
Yeah, he'd be short.
We're not just about saying doom and gloom, right? Look at the
He'd be finding some companies to get some insider information on them so he could
Oh well, yeah, he'd be looking more longer term potential buys, you know, here, especially the medical companies like Gilead and Regeneron.
Yeah.
He'd be investing in those two right there. That's what I would be investing in.
Yeah.
One of those two is going to come out with the cure. You know, not even a cure. Basically, it's a vaccine to basically stop it. Stop it from, I guess, affecting the human body.
Can't wait for that show to come back.
Mm-hmm.
It'll be great, man.
Isn't it May? I think that it comes back, or March or May.
May, I think May.
Yeah, May. Yeah. All right, this guy's computer's done too.
Language about what's happening. Has anything changed between 3:30 p.m. Eastern and 3:42 p.m. Eastern? Because sometimes we hit these markers.
I hate that I can't see Facebook comments, man, because we had a few good people like that were commenting and liking the page and stuff, and just can't. Just cannot.
So we're not that far off the lows of the day. So I don't think that this bounce is going to get any traction. I don't think that today's low is going to be the low of the next few sessions or weeks.
Oh boy.
Do you expect that tomorrow we will go
wants to
down
go down
again,
further
or
here,
some
Trae.
of the sort of bottom
He can go on without me.
bottom feeders? It's not a lovely term. Bottom feeders will come in and say, "Oh, I think something's good here."
She just said
It
bottom
is
feeders.
340. It is 344. Maybe come back and evaluate the market around 6.
But there wasn't much success. So once you try a level and
Whew.
it doesn't bounce off with power, the next time you test that level, which was 32.14, it tends to break that.
Would you sit out the next 24 hours?
Would I am a professional trader? Probably not. But as an investor, I do think that you don't need to be in a rush yet. If you put monthly flows in, continue to do it. If you're looking to really have a bargain or buy a dip, we're only 5% off the highs, and I do think we're going to get some more bad news out of Europe and Asia with the coronavirus. So I would say look for 31.54 on the S&P, which was a prior high. So that's about
31.54.
Right, we're at 3,234 right now.
Yes, I would say within the next week, I think we touched 31.55, and I think that's what
31.55 is a call on the S&P from this guy on TV.
That's where it's going to go.
That's where he's calling it. 31.55.
All right.
To make a run for the border of about 750. Couldn't scratch that back. We're now down, as I said, 955. S&P
All right,
down
let me,
104. I do want to bring up
there you go. There you go. Push up.
we're watching all of this now is the bond yields. Can we show
Dude, break this
Something I've
200
never
level.
traded. I've never traded bond yields
to an all-time low, and the 30-year, by the way,
or bonds in any shape or form.
Yes, 3.
Never have.
8%. So that was a rather significant as we look at that 30.
Oh man.
81%.
And that decline started before the coronavirus started to go into Europe, into Iran, into South Korea. So
What's this candle going to do? What do you want to do here?
the president keeps talking to the Fed saying lower interest rates because
Well, we do have some good news on the horizon if they can get something worked out with India. They're working on that right now. It's a trade deal, but they said that it was kind of rocky, so it's going to be one of those things. Trump's over there now, or was over there. I don't know if he's still there or not, but
I did see some stuff there. Yeah.
That's some good news in the works that could possibly help things. maybe.
Trader too. Phil Flynn's joining us along with Ed Coyne of Sprott. Ed is a gold trader at First
Eat me some garden sausage chippies.
I get in a sense that there is some buying coming in here at the last minute, Wes. We did bounce off some very key technical areas on the S&P this morning, right off the lower Bollinger Band, and we popped off of that area. And this is the first time really since Sunday night opening that we saw any buying activity really step in and try to support this market. This gives me a high hope that tomorrow, cooler heads are going to prevail and we can start to see some recovery. But it always comes down, as you know, to that closing bell the last few minutes of trading. And when we start to see those order flows at the end of the day, it gives you a pretty good idea.
Probably get up here to the 20-day moving average, I think.
A lot of people that are leveraged are really taking a lot of heat. And sometimes as you get closer to the close, a lot of people
31 to 41. There you go.
Love to see it get up there to 91.80.
Well, if it breaks over to 20-day moving average, maybe we'll take a bot call.
So there's a real possibility that we could see a rally, and we're just waiting to see how those order flows come in as we get closer to the close. Right now it's kind of even, Steven. Not a lot of sell pressure, not a lot of buy pressure. It'll probably come down to those last few minutes.
28,077 is where we stand for the Dow Jones Industrials. I bring in Ed Coyne of Sprott. He is a gold investor extraordinaire, but really, Peter Schiffler, he's always saying buy gold, but he's got to explain to us what the value is at the moment for adding a bar of the yellow metal to a portfolio.
Looks like that's where it wants to try to go. Maybe.
Look at it as an insurance policy. When you think about gold as an investment, so often people think of it as a commodity. The reality is, over the last 2 decades, gold's really moved into the alternative asset basket. And when you think about alternative assets, what are they designed to do? They're designed to go down or perform differently.
All right. All right, Ron. We'll do it.
Gold did that in the fourth quarter of 2018. It's doing it again today. And today's really just a not so gentle reminder that the market can go down. And the real purpose of owning gold and gold equities, for that matter, is to have an asset that zigs when the market's sagging. And so I think today is a wonderful example of that, once again, that gold serves as a perfect diversifier in a portfolio.
Just can't get over that 200 period, 20 period moving average, can't?
No. The reason why I wouldn't trade it right now, even though bot's giving a buy signal, it keeps disappearing though. Because it can't get up and over here. It keeps coming back down into this range here, 91.37. You can break and hold here.
6-year period. Once it breaks out of that area, there's not a lot of resistance at that point. So when that happens, that's when gold usually has its most dynamic moves. And so you've got all this pent-up concern in the marketplace that is adding to gold. Central banks have been
back
big
down.
buyers of gold along this range. So even if the coronavirus calm down a little bit, it doesn't mean that gold
Hey, Ron.
down a little bit.
I've been growing a beard for a while.
Gold to the industrial metals today.
So pretty wild looking, man.
But now it was acting like it didn't go from one to be, it was up, and actually silver went down a little bit and then back up a little bit.
Dude, these sell-offs are absolutely nuts.
As silver isn't performing as well as gold.
Guys, we're marking it at about 10.5 minutes before the closing bell rings. And again, Mish Modell of Modell Sporting Goods, he's a businessman. He was on the network earlier.
It's actually probably the most impressive beard I've ever grown before in my life.
But as a businessman, what's going through your mind when you see a stock sell-off like this? Do you worry that your customer is going to be spending less? Tell me the atmosphere and the landscape.
It's about the customers. It's about the 401ks for our associates. It's about the environment. This is like a tragedy, beyond a tragedy, and hopefully
for an employer, because you're looking at fewer customers at the moment.
Fewer customers, also sourcing. How is this going to affect
Hey, Neal.
Imports?
Have you ever really like learned all the Madoff stuff? Like I watched the documentary on him last night, like the full scam, the whole thing, the whole con. He, you know what he did? Guess what he did? He did.
What's that?
He did slow growth at 1% per so many days for his investors, and basically never invested a dime of it in any stock at all. And he hit up like charities and stuff like that, places where he knew like they wouldn't be pulling their money out. And he basically took all their money. He never invested it. He just, went and lived the high life for a while on their money.
On their money.
Saying that he was investing it, and then, he had all this fake portfolio stuff printed up all the time. And everything, dude, and it was never even a thing. And but what I thought was funny was it was 1% per day or 1% per month or something like that.
Yeah.
Kind of interesting concept.
It's interesting. Yeah, yeah. It's not even, and like we know just from just obviously from like a sustainability aspect, it's not that model. It's not sustainable, and I even said to my mom, I said, like even like investing like with us, like, I mean, it's not guaranteed. Nothing's guaranteed. The market could wipe us out, and it is what it is,
The one thing that we can't guarantee is to be 100% transparent.
Yeah, and the other thing too is that we can guarantee that we're not going to be in the market overnight. Like that's the other thing. We always close out all of our positions, when the market closes, and then we reevaluate as the market reopens. And it just gives us a little bit of a better. If we're trading something like longer term, like maybe that might not be a very wise decision, but I think closing out and at least closing it up and then coming back into maybe it could be even a better position, may work out.
Well, and if you and I were to trade something longer term, we would be sized appropriately.
Mm-hmm.
You know what I mean?
Yeah.
Like, if it, we'll protect ourselves with something like that.
Yeah.
Might swing.
Guess I could have shorted that.
Mm-hmm.
I think the biggest mistake investors can make is think about gold as a trade. It truly is an investment. When you think about what it does in a portfolio, more and more investors
What were you thinking about swinging?
the core allocation. So I wouldn't get too caught up.
Oh, just the sizing it appropriate for the if you're going to swing Apple, we'd probably do it with a quarter of our just a very small percentage like of our account, like 10 shares for a small account or 100 shares for a pretty big account or whatever. You're not going to swing Apple with 1,000 shares for over the weekend.
Yeah. All right, Mike. Thank you for hanging out with us again, and we'll see you tomorrow, buddy.
That means it was spiking about 40%. The VIX is up 66% year to date. Right now,
We should swing gold.
just on this session alone. So, Slim,
Probably.
why that's significant. That's a big jump there.
I think what it is
I think we get a little recovery tomorrow, though.
Dollars an ounce, we kind of failed at that area, and they decided to come back down a little bit, mainly because the stock market got a little bit of a bounce. And I think if you look at most of the moves on the commodities, it's been predicated on what the S&P and the Dow have done. When we saw a bounce on those,
This is a beautiful day, though. If you got this, got a nice short at the right time,
dude.
Like there was a guy that was short, 121 points. 121 points.
Dude, that's what I've been saying all day, man. There's been it doesn't matter if you're a bull or a bear, like it gives you opportunity to be a bear and a bull all day. Like I was buying all day, people were shorting all day, and we were both making money.
Yeah.
coming into the not seeing a commitment right now, higher or lower. It's very even. You know, half as many.
I mean, the bull pops were 20, 30 points.
Yeah, they were, man. I'm looking at them right now, man.
Yeah, I mean, and I'm never going to hold them for that long anyway, so what does it really matter? And, you know, I was going for what I was comfortable with, which, you know, I saw a bull pop. I took advantage of it. Give me good risk reward. Boom. In, out. And, you know, but each one of them, I mean, ran a good long ways.
We don't know how broad this coronavirus is. We don't know how deep it is, where it is exposed. We have no idea what's going on in Iran. We have no idea what's going on in North Korea.
Down 1,000. All right. Down 1,000.
And would you be surprised if we closed down?
So we're gonna close below -3, but at least we did touch -3. That's a good thing. 91.80, we touched it.
Losses are concerned, we were lower than that. I do just want to pull up Nike. Nike's a widely held stock, folks. Can we pull that up? It's
Dude, I'm gonna go get me a pair of those Reeboks, man. I can't remember the name of them, but they look pretty sharp. I seen a commercial with them the other day. I can't remember the name of them. Check these shoes out, man. They're pretty slick. They're not expensive either. They're like $120.
$120.
Yeah. The
Man,
Zig.
I haven't bought shoes that expensive in a long time.
Oh yeah. Zig Kinetica. Dude. F. Huh. Well, I would agree with you, but I usually spend more money on the kids than I do myself. But like right now, I'm wearing shoes that come from Walmart, and I'm perfectly happy with them. I love them. I love them. They're so comfortable. And like people give me a hard time. It was so funny, man. When we were in Florida, even my wife's sister was like, she saw the little abbreviation on my shoe, and she's like, "Aren't those Walmart shoes?" She said that to me.
Wow.
I'm like, yeah, they are. They're Walmart shoes, and I like them. Super comfortable, and they only cost me $20. So, but I like a good pair of sneakers, man. I usually will spend a little bit of money on a good pair of shoes. And a good pair of work boots. I've got a good pair of work boots that I always keep on hand. And those are always over $100.
Oh yeah, yeah.
I think the boots I've got right now, they were like $170, man. To be honest with you, they were expensive.
Jesus. Yeah, but they got like steel toes, right?
Well, yeah, they're steel toed and they're Georgia boot.
Damn, guys. Nice short going into the close here. Wow.
There it is.
Didn't trust it. I didn't trust it.
That is how we close the day out in a negative situation.
Man.
Yeah, and it's going to continue just going.
Man, dude. I think 6 o'clock is going to be very interesting.
It's really starting to range big time now, though. These ranges are going to be fun. I mean, as long as it keeps ranging like this, we could make a lot of money in these big ranges like this, man.
Yeah, it's going to be interesting. It's going to be interesting. If we could play them properly and play them smart, we could definitely.
If this is a bear market, if this is a full-on bear market, dude, I think I'm going to like it because I've been doing really well with it, man. I just, you know, if this is the difference between it, then I'm happy. I like how in these bear markets, just the overall swings, man, they're just big, man.
Yeah.
They give opportunity both ways, no matter what.
Yeah, that's really nuts. Like even here, this here, I was thinking about shorting here too. I was like on the phone and I'm talking and I'm like, man, it looks good. It looks good. But if I'm not in a position to be like sitting there watching it 100%, like I can't get into it. And it went 50 points. Right here, you would have gotten in right here on this candle.
for the
There
year.
was like
So
30
that's where
points,
we are on
38
Monday. I'm
points.
confident
But
we
still
can.
good because rejected
Right?
here.
Well, not really. I'm Melissa Francis.
Came
This
in,
is after the
next
bell. The
candle,
S&P
boom.
500 and the Nasdaq both heavily in the red, both down more than 3%. The
Even
S&P
this
500
one.
on the cusp of turning negative for the year. Fox Business team coverage. We're all over it. Blake Berman is at the White House. Christina Partsinevelos is on the floor of the New York Stock Exchange. Phil Flynn is watching the action in oil, and I'll be interested in gold there from the CME. Let's start with Christina.
Yeah, you're right. So what a day. The fact that you're seeing the Dow close over 1,000 points off of the, we had session highs, and I should say that I was seeing negative 700 points, and yay, it was starting to get better, but that's not the point. You're seeing the Dow wipe off all the gains for 2020. The S&P, the worst performance you've seen over the past year or so. You did see some safe haven moving to gold as well as the 10-year, so government
Damn,
bonds.
Trae, you did pretty good
The
today,
government
huh?
bonds, though, are pretty much telling us two different stories. The fact that you have first these
Yes,
long-term
I did. I did really well, man.
Holy cow.
recovery around the globe. That's
Was
been telling
that
us
all
the story for
micros?
the past week or so. And then you had the fact that a lot of investors
Every one of them five. Every one of them five micros at a time. Yeah.
Nice, nice.
That's what I'm saying, man. Them upswings were 10, 20, 30 points, man. And one of them I made almost 20 points on. So it's pretty good. And I've traded more since I posted that.
exposure to China. You had Apple
Wow.
within the past week or so
Dang.
put out a warning with the coronavirus. That's weighing on the sector as a whole, and the chip makers. This is
Dang.
something
Good
I
job,
don't
man.
know with some
Good
people
job. All right,
whether
dude.
they should get
Let me
in
get
or
out of
not.
here.
Some people were talking.
All right, man. Well, have a good day, and we'll do it all over again tomorrow, man.
Yeah, dude. All right, man.
All right.
I'll
Get
talk to
easy.
you.
Okay.
This could trickle on to tomorrow. So that's why it's never good to time the market, as we know. And then airline as a whole. Talk about these travel stocks getting hammered completely because you have the CDC putting out a level 2 warning for Japan, South Korea, the fact that nobody's really going to China at the moment. Now Italy having major issues too. Could that spread to the rest of Europe? We've been looking at some prices for these flights to go to Europe. It's a lot cheaper, but across the board,
All right.
taking the largest hit down more than
Anybody else watching out there?
the airlines. You're seeing hotels.
Take care.
Because many of these hotels a large portion of their revenue.
That's a wrap. I guess we're gonna stop there. We've closed below. We've closed below the -3, but at least we touched the -3. We're coming back to lows, so this is not real good for us. Maybe we'll put in a higher low and we can continue. I love that run up there. That's a good sign that we're gonna find support. Before we break down again. So we'll see.
Christina, thank you.
All right, to our panel now to talk about all of this with
We'll see what happens. I'll be interested to see how the setup for tomorrow looks. I can't do it yet, but I will do it very soon. And
the second or third, most likely the third worst day point-wise. For perspective, as we all know, we've had far worse days in terms of percentage drops, many more days where we've been down 3.5% or more as we are today. But what's your takeaway from what you saw?
Well, look, if you want to make a case that the market is going to go lower from here, you look at the past experience with SARS and you had a bigger sell-off then, or you look at valuations and you say PE ratios are a little bit high right now, therefore we could have further to fall.
Look at that implied volatility, 29.01%.
You could buy a 10-year Treasury.
29.01%.
Where are you? Under 1.4, 137. What are you going to put your money in beside the stock market? And while prices might be a little elevated, they're not crazy, and we're going to faster earnings growth this year certainly than we saw last year. So I don't think this bull market is over. I don't think it ends here. I think we'll have another leg up for stocks.
Now, Heather, what's your take as we all try to get our handle around on what's really happening with this virus, which has proven to be a very, very difficult thing to do, especially with the news, as was mentioned out of Italy over the weekend and what have you, that maybe from an investor's point of view, there was a little mispricing going on in terms of risk and that they didn't really know how bad it was. What's your take?
Sure. Flight to safety, flight to quality is evident in the 10-year bond today. Bonds at or near record lows, like Jack pointed out, on the 30-year. I mean, we haven't seen this in our lifetime and probably won't again. So China is the second largest economy in the world. It really does matter. We're all global and interconnected. And I think the bond yields have been telling us for the past month that the worst is yet to come. Look, I'm a long-term eternal optimist, but I think over the short run, investors should wait. I don't think the pain is over just yet.
All right. Is now the time to buy? Some people might be wondering. Jack, so here's the deal. You mentioned SARS, right? And you said you're looking at it for historic purposes. If you look at the S&P 90 days after the first case was found in the U.S., the S&P was up 22%. For Ebola, 90 days after the first case in the U.S., up 6%. Zika, the index was up 9.4%. My point is that unlike a real financial crisis or another kind of economic contraction, this is something where it tends to come back because it isn't a loss of demand, it's just a delay. Yeah. What are your thoughts on that?
Well, it's an excellent point, and I don't want to just gloss over this situation. I mean, there could be a real economic impact and a bigger one from here. You know, my family, we go to Disney World every year. I'm talking to my wife just this morning. I'm saying, oh, should I book a trip for the summer? She's saying, I don't know, look at this coronavirus. Maybe wait a little bit, see which way this thing turns.
Right.
Now, there's people all across America and you could say that's ridiculous, that's silly, there's no reason. I mean, people don't have to be rational when they're spending their own money on summer vacations. They can wait and see, they can turn cautious. So there could be an economic impact here that we see in the U.S. But to your point, I don't think that this is the fundamental structural change that derails this bull market after 10 years.
Yeah, and by the way, later on in the show, a lot of people are wondering if they should delay their travel. You see deals, you see things get more expensive, and we're going to drill down on those points right now. We're not talking about China. We're talking about when you're trying to go anywhere else because the repercussions are all over. So stay tuned because we're actually, I think that's one of the biggest talkers about this is what to do with your travel plans. But Heather, you know, what do you think about that? I mean, for people who feel like they missed that run up in Apple and they regret it, and then you listen today, and analysts are saying Apple is one of the stocks that's the most vulnerable because they have both demand and production in China. They're going to get hit on both sides. Does Apple start to look tempting, though? Because it's not like however much they're down, they are going to make a huge comeback, given how entrenched they are in the entire world.
Sure, you get out your buying list, I guess, if you're looking at a Christmas list of potential buys. But Foxconn is where they're manufacturing. I think some of their stores are still shut down over in China. A lot of their phones, or all of their phones, are manufactured in China. So this would delay something like 1 million iPhone units from being sold this quarter into next quarter. And with the 1.3 billion Chinese consumers, some of those quarantined in their homes and crippling, really, tourism and travel over in China. Again, I think you wait a little bit longer, but yes, get out a buying list. Nike, for example, and Estee Lauder gets 17% of the revenue from China. So a lot of U.S. companies are impacted by this because of the disruptions in supply chains, having their manufacturing base over in China. That really hurts some U.S. companies.
Jack and Heather, thank you. All
right, we saw 1,000 points down in the stock market on the Dow. The other thing we watched closely today, and Phil Flynn knows about this in Chicago, was oil. Oil plunging more than 3.5% in the floor session, and Phil joins us now from the floor to take us through that and a little bit more. Phil.
Yeah, I mean, we really got hit bad with the coronavirus fears on oil today, going all the way down to $50.45. Now, the key thing here, I think, is that we did not break $50. So psychologically, that gives us a little bit of hope here. You know, the other thing is that the report on the demand destruction that we've seen on oil so far from private sources are saying it's not as bad as previously thought. So a lot of people might look at that and say, hey, if this virus, you know, if we don't get any more bad virus news, maybe we've overplayed it. But right now we're selling oil on what we don't know and concerns that we will go back. Now, it's very interesting that Melissa talked about other virus situations and demand destruction events and how the market came back up. Well, that's true for oil as well, because as the stock market goes, so does oil. How about gold? Well, gold, a 7-year high today. You know, the key thing with that, all the traders were thinking with all this bad news, why didn't we test $1,700 an ounce? So from that viewpoint, some of the technical traders may be a bit disappointed because after this incredible run, we seem to pull back. But having said that, it was still an incredible day on gold, up and down. The industrial metals, what a ride. Platinum, palladium, copper, stay away today. Very volatile.
We'll see what tomorrow brings. Thank you, Phil. Phil Flynn losing his voice like everybody else.
Preparing for the worst, the president receiving daily briefings from a special coronavirus task force. The administration likely to soon request money from Congress to deal with the outbreak. We go to Blake Berman at the White House with the details. Blake.
Hi, Melissa, and this is likely to come via a supplemental funding request from the White House to Capitol Hill at some point. What still remains to be seen at this point when that might happen, though it could potentially happen here in the upcoming days. We are led to believe potentially by the end of the week, and exactly how much money that request will be for. One figure that has been floated is a $1 billion supplemental funding request. However, I stress at this point, nothing has been nailed down. When asked about it earlier today, the White House Deputy Press Secretary Hogan Gidley would not give a figure just yet. Watch here.
We need some funding here to make sure that we protect all Americans, that we keep us safe, we keep us well. And this president was out in front of this, took a fully aggressive approach, putting together the coronavirus task force.
Now, I'm told that task force that he is referring to there, which is led by the Health and Human Services Secretary Alex Azar, back left of your screen there, is having daily calls, sometimes twice a day, along with meetings here at the White House. President Trump, by the way, we are told, continues to receive daily briefings on the coronavirus. Melissa, it has been that way now for several weeks over here at the White House.
Wow.
And continues.
Okay,
Melissa?
Blake, thank you.
Now, in Europe, that's become a big part of the story as they scramble to try to stop the virus from spreading. As an example, authorities in Italy are really now racing to identify the outbreak source in that particular country, and that became a big part of it over the weekend. To Fox News correspondent Amy Kellogg in the ground now in Milan. She has more from there. Amy.
I am standing in front of a shuttered La Scala theater. This is Milan's premier cultural attraction. It is closed. The northern powerhouse region.
All right, guys, so what I'm going to do here, we got 2 more minutes to the official close here. Once this happens, once the close happens, I'm going to set this chart up for you guys right here in front of you.
There's been over 200 cases. There's been a run on stores, and it is strange to see glamorous Italians who rarely bother to put on bicycle helmets wearing masks. The effects on the economy have yet to be seen. The Carnival in Venice, which is an important event in the winter calendar, has been closed down. Veneto, again, one of the outbreak regions. Schools have been closed in Milan and other communities. Churches, cathedrals, people are being asked to work from home in many cases. Bars and clubs are closed from 6 p.m. Fashion is among the industries taking a hit. Milan's famous Fashion Week wrapped up. Giorgio Armani did his show to an empty room, streaming it live. The markets in the fashion industry are down. Now, some people are saying that
1 minute here.
Authorities seem to be really getting this under control, but what is crucial for them at this point is to locate the source of this recent outbreak, because it is not yet clear who infected the person who then went on to infect so many others. A 38-year-old Italian man was not suspected of having coronavirus. He didn't have any obvious connections to China, and it took a while before health officials understood that that is what he had. And in the meantime, he had a lot of contact with other people. They're trying to figure out who was the person who infected this man. And from there, I think they'll feel like they really are starting to get this under control. Back to you.
All right, Amy Kellogg for us in Milan.
Wow. All right, from there to the cost of Medicare for all, Bernie Sanders brushing off questions on how to fund his progressive push to expand health care. And critics say the lack of detail could backfire in the 2020 race. Are they right?
We'll talk about that, plus facing years behind bars, the jury breaking its silence in the landmark trial of Harvey Weinstein, and we will be live at the courthouse coming up.
Okay, so we closed at 90.94. So let's change our 1.5 deviation to 8,887.
Go beyond the numbers to examine investment opportunities firsthand, like innovations in agricultural research. Because your investments deserve the full story.
89.56 for a -1 deviation and -5. 9,025. That'll be that. We're gonna move our POC down. Let's go with +5 here. +5 is going to be 91.63.
And the road beside. Did we mention the road ahead?
plus 1 deviation is going to be 92.30, 92.32.
This isn't just any journey. It's the first day
And
of a new beginning.
1.5 deviation is going to be 93.01.
So that we built a company around it. With every phone
All right, so we got that under control. We'll do standard 2 deviations if we need them. So let's move our value area down for now so we can figure out where we're going to go with it. So let's go to time frame. Let's go back to 15 minutes here. Let's go to 15 minutes, and let's go to if we just want today, right? So now we got today's action. Now what we can do is we can go to studies, we go up here to volume profile, and let's draw us some value area here.
All authenticated by our experts. Shop authenticated luxury the sustainable way, only at The Real Real. Get
Okay, now we're going to put our POC in. And now we'll delete that. And then we'll drop back down to regular 15-minute time frame. And that's going to be our setup for tomorrow. Let's see.
To solutions for the homeless, Ben Carson has HUD Insight tonight on Trish Regan Primetime.
Now you can see how that looks. We've got some POCs up here. We got some.
I have insurance.
Got Tuesday's POC here, and we got 3 more POCs down below. So let's throw this out here. Now let's see where we're at.
You get free coupons to save on your prescriptions.
If you pull that 4-hour out, look at there.
GoodRx. Smart.
You have
Stop paying too much for your prescriptions. Download the free app today.
you have some pretty interesting price action here. So we definitely have structure on the -5. We definitely have structure down here. So this is good. We have structure below. We have structure at the POC and value area. And we have structure to the upside as well. So that's good. That's a good sign for us for tomorrow.
See how much you could save.
Let's go back and turn overnight on. All right, now let's go back over here to. Hang on a second.
2020. Politico has a story that the White House is concerned that the outbreak could threaten an economic slowdown, just as the presidential election is heating up. And we're joined now by Dan Mitchell, who's the chairman at the Center for Freedom and Prosperity. And the idea, Dan, is I guess that you could argue President Trump politically only has one thing going for him, but it's a very big thing. It's a strong economy, an incumbent president in a strong economy. Does this virus potentially, with a slowdown in economic growth around the world, threaten any of that in your view?
There's no question if the virus gets worse, if you begin to not only have problems in China, but South Korea, Italy, Iran, although that doesn't matter. We don't have much trade with them. But it could really crimp world trade, which, by the way, hopefully will educate Trump that trade is good, not bad. And if the economy slows down because trade slows down, that could threaten Trump. But I'll throw one thing out.
Yep.
My pro-Trump friends and my anti-Trump friends, the one thing they all agree on is he's a master of controlling the narrative. So I don't think Trump will sit back and just let the media or Bernie Sanders or Bloomberg or anybody spin a story. He'll get out there very aggressively and say, this is the fault of the virus, this is the fault of China, it's not my fault, and we're going to do X, Y, and Z to deal with it. So I think publicly he'll do much better with the coronavirus than, say, George W. Bush did with TARP. You know, Bush let that the financial crisis get blamed on the free market when it was actually caused by the Federal Reserve and Fannie Mae and Freddie Mac.
Right. He wasn't running at the time for a re-election, but John McCain, certainly most people think was hurt desperately by that in 2008. This thing, you know, it's tough to blame someone politically, right, for a virus, but does that blame matter politically, do you think? If the economy is slowing down, maybe people don't care why it's slowing down. Just when it is means more than anything else, it seems like.
Normally, I would agree with you. The voters, all they care about is the bottom line, what's happening with their disposable income. That's a key variable. It determines their optimism. It determines their, is the country going in the right direction or wrong direction? So much stems from that. However, if you have something that is obviously external and not the fault of anybody in the United States, and if Trump can say, oh boy, we're dealing with this problem, can you imagine how much worse it would be if we had a socialist in the White House trying to turn our economy into Greece at the same time? And again, this is where Trump, because he does not let other people set the narrative, whether you like him or don't like him, I think he'll be in pretty good shape, even if the virus turns out to be worse than we think right now.
Right, and even that's a matter of, it seems like timing more than anything else, which we'll continue to talk about. Dan, always good to see you. Thanks for coming on.
Thank you.
Dan Mitchell. Okay.
The verdict is in. Find out the fate of disgraced Hollywood mogul Harvey Weinstein. Plus, the coronavirus is now threatening the Christmas shopping season, putting the supply of toys at risk, what it means for your family, and of course, the arrival of Baby Yoda.
We made USAA insurance for members like Martin, an Air Force veteran made of doing what's right, not what's easy. So when a hailstorm hit, USAA reached out before he could even inspect the damage.
That's how you do it right.
USAA insurance is made just the way Martin's family needs it. With hassle-free claims, he got paid before his neighbor even got started. Because doing right by our members, that's what's right. USAA. What you're made of, we're made for.
Bulls and Bears is getting extra Fox Business heat. From Dagan McDowell, Charlie Gasparino, Deirdre Bolton, and Lou Dobbs.
You'll love what's next.
Join David Asman for Smart Talk and Insight Wednesday on a special Bulls and Bears.
Hi guys, this is the Chevy Silverado with the world's first invisible trailer.
Invisible trailer?
And it's not the trailer right next to us?
This guy? You don't believe me? Hop in.
Good looking pickup, I will say that.
Wow.
Silverado offers an optional technology package with up to 15 different views, including one enhanced view that makes your trailer appear invisible.
Wow. That's pretty sweet. That's cool.
Oh,
That's awesome.
where's the trailer though?
I love it. It's magic.
Why is Old Dominion #1 in customer satisfaction? Maybe it's OD's over 99% on-time rate, or our decades of supply chain experience that support the dynamic digital marketplace. Or because when we promise something, we keep our promise. The reason OD is #1 in customer satisfaction is our people, who never stop working to make your shipping easier. Old Dominion, helping the world keep promises.
Yeah, Ron, it's something funny going on. Hey, I did get the charts changed. So here's tomorrow's data. Now we can look to 9301, 9232, 9163, POC of 90, 88, 35, and 9025 is a -5, 89, 56, and 88, 87. There's going to be a lot of demand here, and I'm going to pull this up too, because if you pull up a 4-hour chart, look at this right here. Look at this where we're coming into now. You look right here. We've got a lot. You see this past right here. See all this work we got. 1 deviations and the half deviation. We've got a lot of good deviation support levels right there. So we got to play some good levels there, and we've also got value area to play with. We've also got so we'll see what comes of this. I think it'll be a lot different tonight than it was tomorrow. I don't know, but that's my thought. I hope it is. I mean, I don't know. Today wasn't that bad, but for everybody's sake, you know what I mean, Ron? Like, for everybody that's got 401ks, for everybody that's not, able to liquidate everything they got, like we are, that's in control of their 401ks and control of their retirement accounts and stuff. You got to worry about people like that, man.
If your portfolio is $500,000 or more, call us at Fisher Investments. It's your retirement. You can't afford to listen to nonsense. Call 1-800-737-0077.
My parents
lived the American dream, and taught me what it means to be invested.
I saw the power of business and the importance of making your money.
Had a pretty good day. I'll show you my trading day here. 102, 182.
Now facing up to nearly 30 years in prison, Harvey Weinstein convicted
152 and
today of
135.
sex charges, but acquitted on the most
Really good trading day.
against him.
You can see all my trades here, starting with that first one there this morning. Went long here, went to there. Took this trade here, went long, got stopped out, went long again right there, took it right there. Went long here. So not a bad day. Not a bad day.
Bravery, and that this is finally a day of accountability moving forward. Harvey Weinstein was hunched over as he was taken out of the courthouse in handcuffs. That was around 11:55 this morning when the verdict finally came down. The 7 men and 5 women finding Weinstein guilty of criminal sexual act in the first degree for assaulting Mimi Haley in 2006 in his Manhattan loft. The jury also finding him guilty for rape in the third degree. Aspiring actress Jessica Mann says the 67-year-old producer raped her in 2013. But the jury finding Weinstein not guilty of some of the more serious charges, including predatory sexual assault and rape in the first degree. After the verdict, both sides taking some time to respond.
This is the new landscape for survivors of sexual assault in America, I believe, and this is a new day. It's a new day because Harvey Weinstein has finally been held accountable for crimes he committed.
His medical condition is difficult. He's going to be fighting and dealing with those. It will be filed. But an appeal will be filed as soon as possible.
All right. I guess that we're 4:30 now. I will end the stream, guys. But I hope everybody has a good evening, and that that you're able to absorb today. And let's continue on. Tomorrow's Tuesday. It's going to be a good day tomorrow. Don't stress over today. Let's regroup. Today was a good day. I mean, tomorrow could be even better. So let's just wait and see how this market opens up at 6, and see how the overnight session's going to trade, and we'll take it from there. I think we're on to a good day tomorrow. I think we're going to get some good structure. We still got Friday and Monday's POC way up high there. Eventually, I'm going to get all the POCs up. I used to just use one POC, but now I'm going to start using all of them because they give really great targets. And, like especially the past ones, they can give really great targets if we start running. So we'll see what happens there. But Ron, thanks for hanging out with us. Mike, thank you. Everybody else, I see we got a few viewers. Thank you so much for watching us and talking with us and hanging out with us. I know there's a lot of other things you could be doing, so I totally appreciate what you're spending time with us. So anyway, until next time, guys. Until tomorrow. Take care, and we'll do it all over again. So, all right, I'm out of here.
Yeah, their award-winning content is tailored to fit your investing goals and interests.